My name is Sebastien Couture. I am a podcaster. I host a podcast called Epicenter, which I've been doing for quite some time now, and I'm also an angel investor in the crypto space. I did a couple things in the industry. I've co-founded an organization called Hadrien, which is the Association pour le développement des actifs numériques, which I left recently, but we're doing some policy work there. And super interested in DeFi and everything that's happening in the crypto space. And I'm very pleased today to have three panelists with me to explore DeFi, NFTs, maybe even we'll talk about the Metaverse, you know, all this fun stuff. And hopefully you'll come out of this panel with a better understanding of all these things and how they interconnect and what is the future with regards to these different technologies. So I'll let you guys introduce yourselves, but perhaps introduce yourself and tell our audience why you think DeFi is interesting.
Yeah, sure. So my name is Julien Bouteloup. I've been in this space for quite some time. I first got into Bitcoin and then Ethereum, and then been building different projects in the blockchain space. Start on the staking as a service, then move into quantitative algorithmic trading, mostly into market makers, but between centralized exchange and decentralized exchanges. And then we released a few different projects, such as StakeDAO, which is a decentralized exchange where we're doing buying crypto, selling assets, options, trading, all different mechanisms, and we try to make it super easy for retail. And we have a layer of gamification on top of it using NFTs. Also been founded Rect.News, which is a very low-level investigative firm that try to analyze the exploits and all the things that are happening in the DeFi space, but more on as an underground, dark side aspect of the investigations. Blackpool, which is a quantitative firm for the NFT market. We've been investing more than $25 million in the industry. We are the leader on Zerah, which is the football fantasy game. We're top 5 or top 3 on Axie in a few different verticals. We're investing across different NFT markets, and we also participate in the market that we do invest. Yeah, that's it. So, the question was about why is DeFi so interesting?
Why do you find it interesting?
Yeah, I think it's the first time in a society where, for the first time, people can interact with the technology without asking permission. So it's a technology that can be accessible by anyone and built by anyone. And I think that's really the paradigm of this new technology. It's the reason why we're moving into this space, because anyone in the world, regardless of how much money you have, the education that you add, you can still participate into it.
Ivan de Lastours. I'm working as a blockchain crypto lead at Bpifrance. So Bpifrance is an institution. We have a private banking license, but have state-linked shareholders. So we are linked to the French state, like a French sovereign fund. And we finance blockchain startups. We financed 120 French blockchain startups so far. We invest into startups like Ledger, A5, Ariane, and we also invested into a crypto fund, so Whitestar Capital Digital Asset, that invested into great projects like Paraswap, Superfluid. The idea is to go further because as an institution, we can see that the space has already institutions in it. It's not the institutions we know, it's not JP Morgan, it's not Morgan Stanley, but you have more than 120 billion assets under management into professional funds working into crypto. And this is happening right now, and they're having great positions. So the institutionalization of crypto is already on, and that's why we are super sensitive to this space. And one part of this space is DeFi, of course. As a bank and as a heavy regulated bank, We see it as a great privilege for everybody to deploy a smart contract and create a new form of money. I use the word money because it's création monétaire, it's monetary creation. And you can do it wearing a boxer in the morning in your living room. And because you do it, you try to be as creative as possible and do much experimentation, which is not possible.
Because of the boxer?
No.
You lost me here.
No, it's that you can do it the way you want, and you can propose it to the market with another smart contract or liquidity pool. And as a classical bank, it's amazing to see this, because it's something we cannot even imagine. The only guy that can do it is European Central Bank and Banque de France. And we are convinced that there is so much innovation in this, and this is the future of finance, because we can experiment so much stuff. So sorry for the long intro.
Oh, that's great, thanks.
Hadrien Zerah, thank you for having me tonight. I'm managing director of Nomadic Labs. We are a French company of 70 people building and working on the thesis protocol, which is a public blockchain like Ethereum or Bitcoin. And I think DeFi is one of the most beautiful innovation of the next decades, because it allows people to lend money without being a bank, to become a liquidity provider and to be paid to provide liquidity. So thanks to blockchain and decentralization, you can become a broker or a marketplace and take the place of institutions like Euronext. I hope we'll be able to talk about Uniswap, SushiSwap, all this very amazing decentralized application. But you can go further, you can insure people. We have a great project, to my mind, in France called the Unslashed Finance that allows people to insure each other. So yeah, you don't need to have any authorization to be a bank, to lend money, or to be Euronext, to be a broker. Everyone can do it, so this is why I think DeFi is amazing.
Cool, just we have to speak quite loudly to make sure that
Okay, sorry.
People can hear us. What you guys didn't mention, and I think is also, I mean, I agree with like why you guys think that like DeFi is interesting. I think that it's also interesting because currently, like in the current state of the market, it's possible to make like quite high returns on investments and on your placements. I was at a bank this morning, at a bank branch, to open an account for some reason. And the banker, she offered me like a savings account at like 2% or something, and I was like, not gonna make it. Like, this doesn't compute in my brain.
2% is actually pretty good.
Yeah, I mean,
It's called private banking.
No, it wasn't even private banking. But considering the types of yields that people can get on DeFi, I think like there's a clear difference, I think, between like there's a paradigm in the sort of traditional banking sector, and like there's a totally different like mindset and paradigm in DeFi. Like, what is really the biggest paradigm shift that like people are missing? Whether it's like perhaps people in this room that like want to get a better grasp on it, but also like institutions. And I think like Yvon, you're probably well placed here. Like what when you talk to the people in high ranking people in institutions, what is it that they truly fundamentally don't get about the way things are going into DeFi?
First, on a personal level, it takes time to understand institutions. And it's not because you graduated from business school that you understand finance. Because I didn't know what Bank of International Settlement was until I went deeply into crypto. So first, you really understand institutions, and then you see a kind of a very formal system that works like this. And in a way, you don't ask questions into institutions. People say, we do it like this since...
That's the way it is.
So it's not a very good mindset to embrace innovation and new approach. Some people are doing it, but it's more a bottom-up approach. And we can see that. We see that in banks. Most traders are asking their managements to have crypto in their books. But the banks is like, I don't know how to do it, so they quit and they build OTC desk market makers. So I think institutions need to react because otherwise they will lose their talent and they have to adapt, so they have to change their dogma. And yeah, it's simple as that, because not going to make it if they stay this way, in my humble opinion.
Hadrien, I know that you spend a lot of time educating corporates and institutions. Is this a sentiment that resonates with you?
Yeah, completely. With institutions, I think they don't understand yet what is decentralization. But there is hope. We have some nice example in France. We have Société Générale Forge. Maybe some of you have seen that they want to use security tokens representing bonds, for instance, to mint stable coins with the MakerDAO protocol. So it's taking time, but definitely those guys, they don't understand what is decentralization yet.
All right, so let's take a step back here, because I realize we've gone into already in a bit of a rabbit hole, but let's talk about the application. So we mentioned like DEXs and lending. What is it possible to do today with DeFi? What are people doing with it? And like, what can people in this room, perhaps, when they go home tonight, like start looking into to actually tangibly start using DeFi, to also take part in this ecosystem?
Yeah, I mean, the goal of blockchain, like decentralized finance, which is an application of blockchain or based on blockchain. What you can do as a first step is how you can provide liquidity to different projects. And I'm a bit biased because I'm also inside, but Curve Finance, basically, which is providing or incentivizing people to provide liquidity on Curve, and the fees and profits that the protocol is making are coming from auto market makers. So basically the algorithm is built in such a way that you can exchange assets that are stable between each other. Now it's moving a little bit outside of the scope. But this one you can actually become a market maker, or like provide liquidity for the protocol to behave as a market maker. So it's kind of like a brilliant concept. You can go to bed and you know that your liquidity is being worked out for providing those, for making sure that people can swap. And this is actually, if you look at the how traditional finance works, you can have the FX market when you want to change euro against US dollars or other assets. Let's stay on the monetary, on the currency level. Now, like instead of using, for example, cheap TransferWise and all the different things, and even the banking system, they use the different protocol. I mean, not DeFi, but they use FX to transfer assets. Well, here you can do it like in less than 12 seconds in the block propagation of Ethereum, for example. Or you can use, and this is like auto market makers, so it's more like trading aspect, and then you can move to a lending market, and one of the biggest protocol is Aave. And Aave, you provide liquidity for people that don't necessarily want to sell their assets. So when they want to borrow, so for example, if they have ETH and they want to buy a car, or they want to invest in across other mechanism in DeFi, they lend the ETH and then they borrow asset against it. So then they don't sell and they can buy, they can borrow and they can reinvest. Or they can reinvest in the asset they just deposit, which we call leverage. Or they can do like hedging. So you have like the broad scope of traditional finance accessible in the hand of normal people like us. And then, but this, I would say that you need like Epicenter or rec.news, like you need like a good understanding of DeFi first, because it can be like dangerous. You can get wrecked by the slippage, you can get wrecked by the gas cost. So if you're actually playing with assets, with a capital that not necessarily big in the mainnet, which we call Ethereum, then you can like lose a lot of money. Or then you can go across different chains like Polkadot, Solana, Avalanche, Polygon, all different things. Or, so you go directly into this protocol because you have a good understanding of how it works. Or you can actually use system like the one that we built, StakeDAO, that try to make everything super simple for you. And then we take care of all the different, the entire supply chain, from landing those assets across different protocols, and then boosting those APY because we have assets that we know how to make it happen for you. So I think there's a different level of complexity, and if you're just jumping into it, I wouldn't recommend to use those protocols yet, but maybe watch a few different videos that from actors that are very well known in the ecosystem, like Epicenter, or like read some information on reg.news, and then try to grab the info, like how those different things are connected. And if you don't have time, because people like have maybe a job, a daily job, just like try to use platforms that are really well known in the ecosystem. You can go like StakeDAO, you can go like Convex, you can go Yearn, all the different protocols. Obviously, I will preach my own powers, and I will say like StakeDAO is easier because you don't need MetaMask, you don't need like just an email wallet. But yeah, that was my recommendation.
I mean, like, so, you know, using StakeDAO, I think, like, even for a novice or user, or like an early user of DeFi, it's probably even like a step, like, removed from where people should probably get started. And I think one good way to get started is just like, you know, using a wallet that allows you to like stake your assets. So, you know, there's several wallets where you can like buy crypto with a credit card. The onboarding is quite easy. You can, within that wallet, like stake those assets, and basically that's happening. I mean, they're using protocols in the background to stake those assets. That's kind of like the low level, like low-hanging fruit of like how you can basically take your euros and move them into DeFi with like relatively low risk. And then once you've gotten sort of past that first step, then you may want to move into something a little bit more complex.
It's true, like unfortunately the easiest way to jump into the space is centralized exchanges.
Yeah.
Like Coinbase, Binance, and they pour millions of US dollars into UX and UI, and because they control the wallets of users, for them it's easier to make it. It's like it's super simple as using a WhatsApp or Facebook or whatever, for sure.
Maybe to recap on the difference between TradFi and DeFi, there is first an efficiency, like to open a bank account in France takes you 8 days. With Revolut, can take you up to 5 minutes, but you have to go through someone with a public key. You can do this in less than a second, and you can do it yourself. And this is the big difference, is that it's more efficient in a way, and if you want, you can do it yourself, or if you don't trust yourself, you can trust a third party that would set up a custodian wallet for you. But you have this possibility where at a bank, and we can see this in Lebanon right now, the bank holds some assets, and they won't give it back for now, because they need to recover first. So people have lost some money. And we know from sure that many people for Christmas will bring ledger to their families in Lebanon. It's a real use case, because if you don't have institutions anymore, or if you don't trust institutions, you can go with DeFi. And of course, Lebanon is going big with DeFi, because it's another possibility. And it's real life use case.
And do you think in Lebanon people will start paying each other with DAI, for instance, or other stablecoin?
They begin, the government, from what we know, is that it's not easy to get access to some platform or some exchanges. They try to filter the IP, but people find ways. They have great IT guys that are, and a great diaspora, and this is something we clearly monitor to see what could be a DeFi financial system tomorrow. It's a great use case. Sadly, because the situation of Lebanon is critical, but it gives us a good glimpse of what can happen, even if government are against crypto, because of course they want Lebanese people to put money in banks again. So this is super interesting for us to see kind of real use case of DeFi right now.
Maybe a good follow-up to that is, you know, how has the current, like, how do you think the pandemic has maybe accelerated the use of crypto and DeFi, in places like Lebanon, for instance, where like there's a real crisis. Also, in lots of South American countries like El Salvador, Argentina, etc. And to some extent also in more developed countries, what kind of acceleration has the pandemic and the massive inflation in monetary creation done to boost the use of crypto?
I think the lack of stability tends to have more people using crypto assets, stablecoins, what we call stablecoins, crypto that are pegged to dollar, or mostly dollar today, because of what you just described in Venezuela or even in Argentina right now. So people prefer to be paid with stable coins. It's simply becoming safer for them to have those kind of assets instead of the local currency.
We were talking about applications earlier, so we talked about DEXs, so these are decentralized exchanges. Essentially, they act as a sort of automated exchange platform where people can trade one asset for another. We have lending platforms as well, where one can put their liquidity and people can lend against that liquidity, and you're of course paid fees as a liquidity provider. We saw a lot of this come in summer of 2020 when we had like DeFi summer, and then in 2021 we had NFT summer, where NFTs really became sort of like the primary thing that people were doing with their crypto. What do you see as like upcoming trends? Like what do you think is summer 2022 have in store for us?
I think like 2017 was the beginning of what we've seen, like ICOs. Mm-hmm. There was a boom of different projects taking shape, and like 99 of those projects, they were just a landing page and raising a lot of money. And then there was like this kind of like bear market and filtered out all those bullshit projects. And then some of them became really big. That's exactly what happened with the internet bubble. And then now we're seeing like what we've seen, as you mentioned, the NFT. Then we are like auto market maker, lending market, like DeFi basically. And now we're seeing the NFTs, which are more like entering the retail, and people that are using like TikTok and like Facebook, so it's more broader, and so that then get into the attention of institutions and big banks and all this stuff, because now it's if you say that you work in crypto, if you say you work in blockchain, you're not a parasite anymore, and people don't consider you as a stupid, because now it's like it's all over the place. And but NFTs are still like more like what I call it like ICO boom, where they JPEG mode and not really truly creating utility yet. But now we're seeing like people building on top of it. For example, we like how to unlock specific features, how to boost APY, how to have access to specific strategies like such as arbitrage, where you have maximum cap on those strategies. But now what I'm seeing, what will happen, is because of all this competition across blockchain and DeFi, you will have what I call like layer 3, where you build an extra layers on top of all those different blockchains, what will allow people to communicate to each of those blockchains. But from the retail perspective, you will never know if you are on a specific blockchain. Mm-hmm. And then those layer 3 will be able to communicate across those different blockchains to bridges that are so fast and so cheap that then from the retail perspective, you will be like communicating to an API, and then you will have access to liquidity, fast settlement with different monolithic isolated features, such as you want speed, you want privacy, you want scalability, and all the different things will be provided by different blockchains. Like for example, you want on Tezos formal verification, guarantee that you don't get wrecked, all the different things will be able to provide. And then on top of it, after that, we'll see an emerging, and this is already what's happening, of derivatives. Traditional finance, quantitative, hedging, trading desk, banking, financial institutions will bring all those crowns, all those people that already have a good understanding of finance, and will jump into it and will provide options, futures, aging, derivatives, all the different things will happen. And then this will start to become even bigger, even crazier, and also a lot of different opportunities on the market.
Yeah, totally agree on this. The final game, as you mentioned, is derivatives. As why traditional banks are not afraid by crypto right now? They are a little bit afraid, but they are not like panicked. It's because the real market of financial institutions is derivatives. We estimate a $1,000 trillion of derivatives above our heads, and this is real finance. So that's why the crypto market cap is still small. That's why some banks call it a commodity or a new asset class. So
what kind of derivatives are you talking about exactly? Like just
everything, like stock derivatives, climate derivatives. I mean,
bonds, national debts, like everything can be into it.
Exactly.
Anything that people trade essentially on a financial platform, on financial markets.
This is the real game. And the good thing is that the tech, the talents in the crypto world will make this system more efficient and automated. So that's why that's the end game. I totally agree. We have several steps. Then, of course, we expect this layer 2 wars to end maybe one day, maybe before summer 22. We expect DAO space to have a real proposition value. There are great DAOs right now, and people like Stake DAO were pioneers like in this space, but in DAO tooling, there's maybe a maturity curve to reach.
So DAO is decentralized autonomous organization. So it's an organization that is run essentially by a smart contract and which can perform several actions. So it could be like a trading platform, it could be a community, it could be an association, it could be like lots of different things that need sort of governance, right? Yeah.
And third play, as Julien mentioned, is privacy layers, not privacy coins, but some blockchains that can guarantee a good level of privacy for certain transactions. Definitely, we expect this very soon. Some projects already emerged, and we expect bigger projects and bigger financing on this.
I completely agree with Julien. I think if we could have layer 3 that would allow kind of interoperability between all the different existing blockchains, this could be a good game changer. What I see as well, because we are talking about NFTs, I agree as well. I think we are in a bubble phase, but I think that in the next months, 6 to 12 months, we'll see more and more primary marketplace where a lot of people will use decentralization to be able to build their own marketplaces and to not rely on third parties, to be able to mint their NFTs. Because the economical model behind that is quite interesting today, especially within the art space or movie industry, but even more in the gaming and esports space. I think there's a huge trend currently happening right now, and the interesting part, and we are discussing with a lot of gaming industry players these days, and we know that centralized institutions such as JP Morgan or others well-established banks are very keen to finance this kind of NFT project marketplace, because there is a very interesting business model, economical model behind that, where on every secondary marketplace where you trade an NFT, the minter or the creator of the NFT can get a cut. So a small percentage of the trade which is being done by anyone on any secondary marketplace. And this is really, really interesting for artists to get rid of third parties and to be able to self-finance. And it's a potential kind of infinite revenue source for those players. So I think this is a trend which is going to be more and more seen in the next months. And finally, maybe we are discussing. I think we are seeing new kind of DAOs appearing, so decentralized autonomous organization, with the most famous one, which is called Olympus DAO, where the DAO is the owner of the liquidity, of its own liquidity on protocols such as SushiSwap or Uniswap. And it's new, it's 6 months old, if I'm not mistaken, and I think it's really, really, really interesting. And I believe that these kind of DAOs are going to become more and more present in the next months. Yeah.
So I hear like 3 or 4 big trends. One is layer 3. So just maybe to clarify, so we have like layer 1s, which you probably all know of as like Bitcoin, Ethereum, Cosmos, Polkadot, etc. Then we have layer 2s that are like the sort of scaling layers on top of those. So layer 1s are famously like unscalable, right? Like they have scaling problems. So we've built layers on top of those to be able to scale those even further so that we can do more transactions even faster, even cheaper. And layer 3s is this concept that we will be able to sort of homogenize all these chains and have them be interoperable and be able to move assets between all the chains. The other trend is derivatives, which I totally agree. I think it's like that's the kicker. That's sort of the kicker that gets the banks really sort of trembling. Because this is where they have essentially like most of their business today. And one extra trend is like what you were mentioning is I like to call it the financialization of communities. And I think this ties in, it sort of ties into this whole metaverse narrative as well, where I think that a likely future is one where social networks as we know them are intrinsically financial. And so we may see this start happening with like communities building around NFTs, where you have NFTs that are essentially serving as the liquidity, serving as the value that is then issued as a sort of token that people in that community can use as a form of payment, perhaps like a stablecoin or something like that. And you essentially meld communities and finance together. And I think that it really ties perfectly into the whole metaverse narrative, where essentially the metaverse is, tries to create like an alternate reality than our current reality, and you're going to need sort of like economics there, and it just works so well if you sort of like pull stuff together. Speaking about like NFTs, and maybe let's stay on this for a little bit, because I think like a lot of people here are probably also interested in NFTs. What is the interaction between DeFi and NFTs currently? Like, where do you guys think this is going to go?
First, I mean, the NFT narrative is pretty new, and we still discover it, because here we're a bank, so we're kind of boomers with NFTs. But we are fascinated because first, as you mentioned, it's an asset, so you can collateralize it, you can use it in many ways. And then we expect also links with the real world of the metaverse, that these NFTs gives you usage, real world or metaverse usage. And a good example is a French project called the Sandbox. For me, the Sandbox is a marketing company. They give you, it's like chez, but virtual, and they give you space where you can advertise and bring people to your place. So and this is only the beginning of the NFTs. There are many applications in art and stuff, but on this, I prefer let Julien and Hadrien speak about it, because at the end of the day we're a bank, so we have less sensitivity to this, but we are super bullish on this narrative, of course.
Yeah, sure. So I started my personal adventure in the NFT market with CryptoKitties back then, and I tried to buy the
What's
first.
the floor on a CryptoKitty today?
It's swapping the floor
Yeah.
himself. Not you can swap the floor if you want to. Yeah, that's true actually. Buy all of them in one shot. But yeah, participate in this. That was in New York City, in Brooklyn, in the first CryptoKitty, the 101, like the first one. and got sold by 120,000 US dollars. And then bear market, everything collapsed. The end of blockchain and crypto. Just kidding. And then 2 years ago, I always forget because of COVID. I feel like it's always it's like 3 years ago. But at the beginning of Zerah, got involved in like a little bit of the company, like investment and auditing, and then we discovered like the NFT market and started investing a little bit in the NFT market, and that's where there was no attention to the NFT market, but because of Zerah, I got into it like a little bit more, and there was needed of capital for buying Mbappe back then. No one wanted to buy, like invest in Zerah or whatever. But now, in Blackpool, that is managing Mbappe, we bought it for something like 80,000 US dollars.
So Blackpool is your NFT fund?
Blackpool is a fund, but more than a fund, it's a quantitative fund because compared to normal fund, like for example BP, like a fund that will invest in companies, they don't actually play with the assets that they own. They just leave it. So it's passive investment. A hedge fund, what they would do, like a quant, like a quantitative fund, they will invest, but then they will utilize their investment to play in those different verticals. It can be like arts, gaming, real estate, sandbox, crypto voxel, Decentraland, all those different verticals can be also like board games, anything. So we invest, and now we found the 3 best managers in the game, and after like months of playing the game with Mbappe and other stuff, now Mbappe is probably worth like, I don't know, we have one of the quant of Blackpool here, it can tell you, but I would say maybe it's something stupid, like 2 million, 2.5 million, I don't know. The API are so good because we now are the best into the game. But my point is, the NFT market over the past few months, like years, have been growing so fast that now you have like companies that have built, for example, Zerah, valuation of 3.4 or 5.4 billion, just on the equity market without having a token. So what's happening is you have now the NFT that is booming because of a lot of attention in the market, but also because imagine playing FIFA or a PS or like Football Manager and playing with those assets, but those assets have only value in the game because for your own game and you can play against other players. Well, here in Zerah or other NFT markets, what's happening is the players that you play are in real time correlated to the performance in real life of players. For example, if Mbappe, I remember when I was like PSG, Barcelona, I think we won 4-0. And then boom, the Mbappe got so many points in the game of Zerah that we could play for the next games. And then we made return on investment very quick. But my point is like, starting gaming, and now we're seeing arts, constitutions bought for 45 million. A DAO tried to buy it, but then the CEO of Citadel bought it. My point is, now with NFTs, we can ourselves enter markets that were never accessible to us or only accredited investors. I know there's like arts coming on the market from Napoleon, like some stuff that are being sold on the market, and this is actually only accessible. You can do it like through OpenSea. So my point is like now we're entering a phase where first we're getting into arts, gaming, because they are the 2 easiest vertical to enter, but then you will see soon like derivatives on the NFT market, and then also using those NFTs to unlock specific features inside the metaverse, for example. Well, I think for me it's a little bit crazy because if regulations are not able to regulate this current market because it goes super fast and it's not stoppable, it's unstoppable, what will happen in a metaverse where you can create your own room, your own community, accessible by certain NFTs? What is saying events like Bored Apes in New York City, there was only some events that were only accessible by the people that own those NFTs. But what happened in the NFT world, in the metaverse world? And this is how we're entering, maybe it's not layer 3, it's like layer X, layer 4, it's like, boom, like all the things that we've been building will be accessible to the metaverse, but for certain, like a branch of people.
Regarding the link between NFT and DeFi, I think the first one, Yvan, you mentioned that, it's to use the NFTs as a collateral to borrow stablecoin or cryptos. I think it's something not yet seen, but
No, it's
Yeah.
already the case. A second one, maybe new, we are talking about derivatives. Maybe we could imagine NFT representing a financial asset, a structured product, for instance, but instead of having it as a fungible token, a security token, it could be an NFT. Yeah, maybe I wouldn't be surprised to see such NFTs appearing in the next years, maybe.
Cool. Thanks for the insight. Since the title of this panel is made in France, I'd like to maybe to bring it back to France a little bit. We hear a lot of talk about states wanting to maintain their sovereignty, and there's a lot of, I think, concern from governments about maintaining their monetary sovereignty. I see you're nodding your head there. In a world where teams are remote and we have protocols that are decentralized and people are moving around and we have potentially more human activity going online into the metaverse. I mean, the metaverse is just the internet, but it's the internet plus good VR. Does this notion of sovereignty even matter anymore? Is sovereignty just something that will also get disrupted?
Yes, everybody remembers internet's own boy, who's the Reddit guy. I think we are close to this. We are kind of internet citizens, and I hope that the next generation will put that first instead of your nationality, color of skin, where you think. This is my big hope. Maybe I'm a little bit too old for this, or I'm polluted by the old way of thinking. But I'm super hopeful that these new ways of humanity and interacting can bring a better future, and I'm dead serious about this. And I totally agree. I mean, you are at Bpifrance, it's in the name. We cannot hide it. So we have to change. Maybe we can call it Bpifrance.
You need to make Bpifrance into a DAO. You got to do it.
I don't agree with that. Not at all for me. I truly believe that a nation state and cultures and I want to keep it. I want to keep, even if I want to have access to global market, financial, easiness of all the different products that I'm using. At the end of the day, I still want to travel. Still want to meet new cultures. I don't want to have one country in this world. I can use the internet to have one country, but I still want to have the France. I want France to be strong, and that's it. I mean, I think it's this kind of internet is great, Metaverse is great, but at the end of the day, you also have the real life, and real life is based on having different cultures, having different way of thinking, and having different way of living. Otherwise, there's no point of traveling, and I would just stay on my bed and put my VR set, and that's it. Get and drink a lot, and then get fat, and that's it. No, so yeah, I truly believe we can still keep the nations, and that's what makes the Earth a planet of multiple different way of thinking without entering this one entity that will all do the same. I mean, this is kind of boring to me.
Yeah, totally agree. I just hope that sometimes I call the blockchain guys in France, or all these builders, the Huguenot 2.0. There is a community, there's an identity, and it is recognized worldwide, and it's a luck. It's just that there is a saying in French, nobody is a prophet in its own country. And I believe that France can make it, but I hope that they can understand that we have huge potentials, huge startups, huge builders like you guys, and that we can have a good mixed culture, and we can make it. Because if we don't consider this, then people will leave and build other culture and integrate themselves into other culture that will accept this, and we can already see it. So that's what I'm afraid of, is that a kind of a clash.
It's different. It's more like we are a great culture, we are a great nation, we are a great country, but what needs to be changed is the bureaucracy, like trying to make sure that they understand the change is coming, they cannot stop it, and slowing down these changes would just accelerate other people to compete with us. And this is like very important, but we can keep the culture, we can keep like welcoming people as a great nations, visiting the first country in the world for visits. But at the same time, we need to understand, and the bureaucracy needs to understand, like the assembly and all the different things, that, for example, by stopping crypto, by making high taxes, so you're basically like incentivizing people to leave the country. Well, you should do the opposite. Welcome anyone to build as fast as possible, bring value, because when you tax one guy that probably made it become rich in crypto, what you actually stop is him organizing massive events, massive parties, massive conferences, building teams that each of those people will spend money in restaurants, in parties, in cinemas. I love parties a lot. And all the different things. So that's what I understand. Like making high tax on one single individual can actually impact the entire economy. Yeah. So what I would like to see is like France welcoming, or Europe welcoming crypto. Let's start, let's build, let's accelerate. And then at some point we can say, okay, now it's time to tax a little bit. But right now there's no regulatory framework. People are leaving the country to build multi-billion companies outside, unicorns, that then will soon control the world. Remember this sentence?
I wouldn't say there's no regulatory framework. I mean,
no,
France
like,
has a regulatory framework.
No, there's like a regulatory framework but no one actually understands.
It might be like full bureaucracy, but there is a framework.
I mean, okay, if you have crypto in this country, yeah. What do you do? Like, we have like more than 70 people working in our companies, and they're all asking themselves, I have crypto in France, but I don't know what to do. Like,
yeah, I mean, you're talking about the tax aspect, and I mean, like, I agree. Like, I mean, the taxation in France with regards to crypto is not great, and recently there were several amendments made.
It was good at the beginning.
Yeah,
like, very good.
Very good, yeah. But there were several amendments made at l'Assemblée nationale that were backed by drafted by Hadrien for the most part, and they were not accepted. I think the way that I interpreted this is it's really like there's a break between like this sort of old bureaucratic way of thinking and like a new wave of people coming in and who are trying to make it, and there's a clash there. Maybe a good follow-up question, and perhaps like the question I'd like to end on here before we move to the cocktail, or questions and answers first, of course. Is like there appears to be like what I've perceived in my dealings with institutions and also the government is there appears to be like a double narrative in France. Like in 2019, 18 and 19, like there was La Loi Pacte. Bouteloup was like, okay, blockchain, everything's cool. France is going to be the crypto nation, all this stuff. And what we actually found out that meant was he wasn't talking about crypto, he was talking about blockchain, and that narrative continues to this day. And members of government are very reluctant to talk about crypto. It's starting to change a little bit, but we still saw it like a month ago when CZ came to France and like Silico kept nailing in like the blockchain narrative and not the crypto narrative. How do you feel about this policy, like this seemingly internal policy to really push crypto to the side, but like try to keep pushing this like blockchain without crypto narrative?
I have to stay positive Because if we compare ourselves to other European countries, we have some stuff and we have some people working on it. And I love the Anthony Pompliano post about red pill administration. We know great people in Ministry of Economy, in the regulators, that are crypto believers. And that gives us hope that they can bring intelligence and a good approach to this. So the idea is to stay positive, but of course it is so different, and the classic banking system with a central bank and commercial banks is complicated to manage, because now the real economy is turning on this system, on this stack. And the government, I understand this, I have empathy, because if I had a higher position, I would be dependent on this economical stack. So the idea, if we are clever, is to make a good transition between these two stacks. And this is why, again, we need a euro stablecoin. And not in 2026 or 27, and not on Hyperledger.
Not issued by the ECB.
But that would be a great first step. Then we can have this transition. And I'm really positive about this, and I think we can have it, so let's stay positive. Otherwise, I don't know what it will be.
That's a good point.
I think it's not that bad with Loi Pacte in France, which is a legal framework that allows to have nice projects such as Société Générale Forge, or you were talking about stablecoin, Euro stablecoin. We have Casino Lug with this Euro stablecoin. But when it comes to deeper projects with blockchain or crypto, decentralized finance, unfortunately we see people building in France but opening the companies outside of France. I think it's a shame, because a lot of innovation is happening. There are wonderful things, I think, within the DeFi space, and this could create a lot of, people could build more and more in France. We could have more people investing and creating more works, so jobs in our country. So I think it's not that bad for institutional projects such as the one I described with Société Générale and Casino, or we have seen some tokenization of investment funds within the movie industry with the BNP Paribas. But I would love to have more trust. I think our public makers, they do not understand enough the power of decentralization and the beauty of decentralized finance and what it could bring to our country. Maybe it's a question of time, but the sad reality is that a lot of projects are being built in France, but the companies are not in France, and more people are building projects, DeFi projects, DAOs, in an anonymous way, to not be then tracked by regulators. So it's a pity.
It's actually, if I can add something.
Please, yeah.
It's actually a good point, because there's 2 points. Like, in all the biggest unicorns in DeFi, I said all, but a huge proportions of them, you always have French people inside. You can take all of them. And I'm not talking about like employees, I'm talking about high responsibility, the core team of those projects. You have two people. You have Marc that is working for Aave, you have Stanley, Jordan, who's actually the CEO. In Curve, same. We are 3 or 4 French guys, and the team is very small. Across the entire stack, we have French people, because I think our education is built like the Cartesian way of thinking that we are taught at school fits perfectly well the DeFi and this new paradigm. And that's why you actually, we have 70 people, more than that. Every time we're trying to hire, I've seen like 2 trends. Either it's like French guys that always make it for us, not because I'm biased and I left the country a long time ago, or East countries and Russia. Like always people with mathematical way of reasoning. And this is like, and then there was another point from you that was really good, is I think France, I don't think we'll make it by forcing governments or people that are sitting on the top to change their mind. It's probably like, it will make them, it will help it, but it will just be super slow. My point is, the sharing economy became a sharing economy because you had people that came outside from the taxi market, from the hotel industry, like Uber, BlaBlaCar, and Airbnb, disrupt the entire ecosystem, entire society, where this market was super mafia cartel market, and now they disrupt it. So my point is here, and then coming back to your point, I think France has a huge opportunity to get its sovereignty back on an international level because of controlling monetary policy, thanks maybe to Europe as well. By what? By first regaining control of the money, and then by printing stablecoin euro. It's like, it's kind of a shame that in 2021, I mean, I want to see the numbers, but any single person that is involved in crypto has now US dollars in his pocket. Never happened before. Where is the euro?
Yeah.
So if we start pushing for euros, and there was a massive project built by polytechnics, to politician, people from polytechnics, like Angle project, also like the company probably outside. But my point is like, we have now a huge opportunity to print euro, distribute this euro to many people in Europe, and also outside, and regain sovereignty in this country, and Europe-based as well.
And by the way, I think Angle people, they are anonymous. We don't know.
No.
On their website, you know because you're in the space.
No, they were like at ECC, and we invited them. We did panels. Maybe some people from the team are anonymous because I mean it's always nice to have some people anonymous on your team. But the team, no, the team is well known. A group of young engineers and very good ones. And I think we should push. In any school, engineering school that we have in France, I think we should teach blockchain, crypto, and like massively spend billions in that.
This is a great example because these guys did Polytechnic and then went to Stanford, and they got their ideas in Stanford, and their professor in Stanford pushed them.
It's not only professor, like they got presentation from all the biggest actors from blockchain and DeFi, all the biggest one, Coinbase, like all the biggest protocols came on stage, present their idea, present the protocol, present the ideas, and then they go, oh shit, okay, we can build that. Get back to Europe and then start just, even without any experience in blockchain, took them 6 months. Start building something, have the idea, and then kick off. But yeah.
All right, well, I think that's a good note to end on. But we're going to make it. France is going to make it.
France is going to make it.
Nice.
Questions?
Hashtag FIGMI. Do we have any questions from the audience? If we have time for questions.
Yeah, maybe one question, if any, here. And if not, we have a question from the live streaming. Anyone here first? Everyone's gonna make it here? Great. So we have a question from Julien for Elon. It's a difficult one. Earlier you were saying DeFi has many advantages over banks. But one of the big advantages that bank has over DeFi is uncollateralized loans. Basically, loans backed by identity credit score. Since crypto is a black forest and you can't trust anyone, it makes DeFi much less capital efficient since you need to be over collateral to take any credit. What's your thought on this?
It's an excellent question because we had a meeting here with some guys from Bpifrance, and we had some discussions about monetary policies. And one beautiful thing in classical finance, in TradFi, is fractional reserve. You have one, but you're allowed to lend 9 unity more. Why? Because the system allows you to do this. But this is monetary creation. So the bankers tried to explain me, like I was 2 years old, that it's backed by great quality assets and blah, blah, blah. But at the end of the day, it is kind of a trick to boost the economy. And it worked, and it's still working. So DeFi, in a way, this is a competitive advantage of real finance, but it's based on trust within the institution. And now everybody in crypto gets that some people are printing money. So maybe the trust will go lower. When you have nearly 10% inflation in US, then you can ask yourself a question. I mean, 10% inflation, so in 5-6 years, price have doubled. So this is why I can't predict the future, but narrative is changing, and now you have an alternative. And we are super bullish of having an alternative, and honestly, I'm maybe shameful, but before, I didn't really know what fractional reserve was, and my mother still doesn't know, and she doesn't care. But now I think millions of people are caring and want a fair system. So he's right, this is a competitive advantage, but maybe we can have a better system with better incentives, and where we believe it's a better system. That's a very good question.
But uncollateralized loan, they're coming to the market. They're coming to credit lines, and Ave has been working on that as well, and also released something a couple months ago. But users now can, because of trust, if I believe that someone will give me money back, I can lend asset that this person over collateralizing or like providing any value. But credit ratings can also be very dangerous because I mean, what we're seeing, for example, in Asia or whatever, it's because the power of blockchain is to be able to track all the different transactions, and even if people like to say they are anonymous, those transactions, the fact that we use them to MetaMask or Chrome or whatever, so cookies, and it's very, I mean, it's known now on the market that it's very easy to connect those wallets between each other, and so even if you never interact with the centralized exchange, for example, chain analysis or whatever, they can actually know that you have those different assets. But credit ratings, if you build it, then at some point, because everything is accessible by anyone and built by anyone, then you can know everything about people, and you can basically select what kind of products and tools you want to give to people or not. And for example, someone want to take the train to go back to his parents, then he's not, he cannot do it because his credit rating is not good. And then, so the only way that we can achieve under collateralized loan that are not becoming too dangerous, or even crypto, I think it's the point that you said, privacy. But I think we don't make blockchain completely private in terms of transactions. I know it can cause like problems of people using the blockchain in very bad ways, but I think if we don't make it, you will have companies and institutions and nation states that will try to monitor, stop, regulate in a very bad way, and this can actually control people basically, and Big Brother, because for us we're talking about blockchain in a very good way, but if it's actually used by governance in a way of surveillance, then it can be very crazy.
So on that point, if I may ask, so just to understand the point better, do you think that CBDCs would be a long-term threat to DeFi, or not necessarily?
I mean, for me, I think it's great. More liquidity entering the market, as long as it's euros. But no, I mean, it's the only way that governments and institutions can enter the market is like having national currencies, but then we'll compete with other form of currencies. And at some point, like this new, never happened in history of our society, in a way that how can we change this, like for example, fractional reserve, and how can we change this mechanism of if a country is producing less value than the year before, we call it not good, you know? What does it even mean? And so, yeah, so the new shift, for example, we say, we price something as Bitcoin is the alternative to dollars or Ethereum. Well, the reality is a little bit more tricky, because in order to produce one Bitcoin, you need to buy US dollars, because you need to buy NVIDIA or graphic cards, and those graphic cards are actually priced in US dollars. The barrel of oil is priced in US dollars. And that's the reason why the entire economy is driven by the US at the moment. They're printing cash. It doesn't matter if the economy is going down by 10% for them, because they're actually printing the cash and then selling it to other countries as a debt. And we buy it because we have no other choice to buy this currency. So the point is like, the day that this will change, maybe as a new paradigm, it will be like when we start pricing things in a real asset that is being produced. For example, Bitcoin, you buy graphic cards in Bitcoin. You start mining in Bitcoin. You start proof of stake validations in Ethereum. People start accepting the currencies. And then as soon as this happens, and that's why it's actually a real threat for like the Fed or people printing cash, because at this point, you don't need them. And when you don't need them, then they are becoming irrelevant. And this is what actually the threat becomes. But we can change the thing. And at the moment, it's scary for them. And I remember like, there was a Congress speech saying the biggest threat is not wars or nuclear weapons. It's actually stable coins and crypto economy.
Thank you.
Yeah, to bounce back on this topic of institution, what would be for each of you, we talked a bit about it, but the smartest way for institutions, and especially for France, to take advantage of DeFi, of not letting the train pass without it and getting in trouble, but take the train before and anticipate on that. What would be your take?
So just to rephrase the question for our listeners, the question is, what's the best way for institutions to get on board the crypto train?
Yeah, and the DeFi particularly.
And the DeFi train, yeah.
Very simple. First, do your own research, like know what you're dealing with, and then get exposure. Trying to finance projects that are building this space and are bringing value. And then after, maybe you can participate with liquidity, with projects. But this is clearly our strategy, is to get exposure, not being to go frontal with the regulators, ask for anything and scare people, just get smart exposure. The good thing is that we have mandates to foster innovation in France, so we can go through these mandates, invest, and we will go further. We have nearly 40 million exposure to crypto projects. The idea is to go to 200 million next year, in the next coming years. And I think it's the first way and the most efficient way to go. Don't try to be a crypto kid as a bank. This will fail 100% of the time. We are bankers, we're TradFi, but we can get smart exposure.
I think the first thing public institutions in France should do is to have digital euro on the public blockchain and not on a private one. I think it's the most important milestone. It's difficult. You have some problems when you do it because, for instance, let's imagine we have a digital euro on the public blockchain such as Ethereum or Tezos, or both. Then transactions are included in blocks, and those blocks are produced by miners or bakers. And sometimes, so people broadcasting transaction, they will pay a transaction fee to a miner on Ethereum or a baker on Tezos. And this could be problematic because if this baker is in Iran or North Korea or blacklisted, I don't know, country, then you can have some troubles. But I think it's the most important thing first to have innovation flourishing in our countries, to have a euro stablecoin on, and I insist on that on the public blockchain. The second part is, I think, try to innovate, but unfortunately, and I can see it because we are working with, some institutions, corporate companies, they manage to innovate fast enough, but most of them they are not fast enough. When you compare insurance companies with companies such as Unslashed or lending banks, when you compare with Aave or Euronext with Uniswap, SushiSwap, or they just don't move fast enough, So I think they should try to acquire those kind of protocol, which is very difficult because most of them are DAOs. So they should go on the market and buy some governance token. And yeah, I think the best way to move for them is to try to acquire governance tokens of DAOs that are DeFi protocols.
I remember the Mario who said that, but I think there was a sentence saying we missed the revolution of the internet, and but we're not gonna miss the revolution of machine learning, AI, and blockchain. Well, the reality is today, if you really want to achieve this, I mean, internet became in the US in the 80s, and it really started becoming something in Europe in 2000.
And I might add also an important thing to know about the internet was funded by the U.S. government. I mean, like all of the infrastructure, the technology.
Well, DARPA and
I mean,
military.
like funded by the state. Yeah.
Yeah, but it took us 20 years to realize that something was happening over there. But back then there was no like such things as Facebook, WhatsApp, messengers, and today we have global communications, instant communications, access to knowledge, and access to everything that's happening in this world. So my question is, I want to understand, if a technology is built on mathematics, axiom, 1 + 1 = 2, you cannot really counterbat this. The reason why you're trying to stop a revolution that is happening right now globally in the world. So even if there's like some questions about maybe a miner will be in a different country or whatever, the thing is, what's your counterbat? What's your, if you don't do it, what will this decision make for your own country compared to if you do it? So what if I was maybe like some responsibility of the governments, I would just make this country crypto friendly. I will tell anyone that is doing crypto projects, anyone that is actually building value, you can come, and then we'll try for your business, we'll give you 3-5 years before you can be like regulated. And then those people will not leave, they will build stablecoin, they will build lending market, they will build auto market maker. And this will happen very fast because the French people are very good at technology. But then they get scared when there's regulation, we're not so good at law, not so good at fighting cases. So then we leave and we start working for others that are the control of the law and the control of fighting, and then primarily business. It's not a military war, it's economic war. And those guys are the US or the Americans. That's why actually those projects always happen there, because they're actually not scared of fighting legally on the ground of any country in this world. So I will make this country friendly and then pour capital. BPI, BPI, and other companies, banking, I would just like lend money to anyone that is willing to build projects in a crypto and blockchain space, and AI space, and Metaverse or whatever. But yeah, that's what I would do, and not actually scare people, because there's no point of stopping someone from innovating just because you want to wreck him on taxes, or you think that maybe in 10 years, 20 years, this will be bad. No, let's test it, let's prove it. It's like being in the 80s, you know. What about using internet in the 80s in France? Wait until 2000, internet bubble, but then we have like thousands of projects being built, and then we can start regulating.
Any other questions?
You are talking about the miners, okay, so we need the computer power, so another to mine. What about the quantic computer? IBM made one, and one day, like all houses will have a quantic computer, so will it be like the end of crypto because the power of mining will be like multiplied by 1,000, 10,000, I don't know, or will this be like a new beginning of that?
So you have two things in blockchain. You have the proof of work and proof of stakes. So by the quantum computer, I believe like we'll move to proof of stakes, and this is more like a cryptonomics, economic gaming. So there's no need of massive power. But if this doesn't happen and blockchain doesn't move faster than quantic computer, it doesn't matter, because the thing is like in proof of work, I mean, it will probably matter a little bit, but the fact that when we say like we need a computation power, it's not so much about resolving a problem that is difficult. It's more about having enough power to go through all the different possibilities. It's like, it's very stupid. I mean, resolving the problem on Ethereum or Bitcoin is very stupid. It's just a huge test. You know, it's like brute forcing. Brute forcing and cracking a Wi-Fi key or cracking anything. It's just brute forcing. But it depends on how much power you have compared to others. And this brute forcing formula that is built is basically proportional to the entire power that you have. It's built in such a way that it will take that much of time depending on the power that is accessible on the network. So my point is, if we enter those massive way of doing computations, those algorithms that were built in Bitcoin, SEC, or those different things will just change. Will just update it, or will just increase the computational power. But the guy that built it and doesn't tell people and then enter the market without telling, this is where it actually becomes very interesting.
Yeah, I'm not an expert on quantum computing, but I understand that quantum computing is not particularly good at doing brute forcing.
Exactly.
And there are also, encryption, I'm thinking in French, speaking in English. There are encryption algorithms that are quantum resistant. So that's about as much as I know about quantum computing. But Epicenter has an episode from a couple of years ago with like experts on quantum computing, and they explain it in great detail. So I'd invite you to check that out. I think we're good. Thank you, everyone, for...
Maybe one final phrase for people who are in Web 2, convince